BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back to Pump City FM. So it looks like a pretty decent reaction so far from the bottom of that trend line there. So that channel, which is basically highlighted by a 200 exponential moving average, which is now crossing in the channel, given extra weight to maybe this being the bottom of the channel, as in like maybe this is the one that leads to the breakout. It's highly possible. If we take away all the noise, because I appreciate these charts are a bit noisy basically, we can just have a look at the two formations that really count for something. So descending triangle, so the top of this trend line part of the channel is also part of a descending triangle. We were getting rejected the whole time. We were saying that the closer you get to the end of an apex, the more likely it is to have a fake out or a fake breakdown. We had a breakdown, obviously, thanks to the SEC, and we got picked up at the bottom of it. Now we turn back all the noise on, we can see that it's highlighted by one of our favourite moving averages, the old 200 exponential, which is simply just another golden cross retest, really, from back in the olden days. Now, look, these falling channels like this do break out way more than breakdown, right? That is just the nature of it. It's effectively a consolidation. You consolidate, you accumulate, you break. And so we would be looking for this to break out. And also, we've got the breakdown and then reabsorbed back into the descending triangle, which is, again, that whole fake out scenario that we were talking about for the last week or two. So we've got two really good, strong, positive vibes going on right now. First of all, we're still in the consolidation, which is fine. We hit a 200 exponential and a trend line at the bottom. We had a fake breakdown, potentially, which is going to lead to a breakout. So everything's looking pretty sweet, I have to say. Very, very good indeed. And if this is the best the SEC can do to price action, given what they've said, you know, they've said, oh, we're going to sue you and you. We're suing everybody. We're suing everyone. Sue you, sue Binance, sue Coinbase, sue all these altcoins, suing everybody. They're still slugging it out with XRP at the moment, which is madness. So I think they've bitten off more than they can chew. If you look at the responses, especially from Coinbase, I mean, it's embarrassing, I think, for the SEC to even try to launch some form of court case against them, given everything that Coinbase has tried to achieve with regulations. It's ridiculous. So, in my opinion, the FUD is just FUD. I don't see what else they can do really at this point. I think it's going to end up in a really embarrassing loss across the board for everything. They might manage to get something from Binance, because Binance does do some questionable practices, or has done in the past. They've tried to toe the line for the last 18 months at least, anyway. But Coinbase, they're like they're like the golden boys. They do everything that's asked. They do it properly. They don't mess around with leverage. They're fine. They're good boys. Anyway, so it seems like a lot of nonsense now, especially just standing back and reflecting on it. And yeah, what's the worst that can happen? Binance will get fined. Maybe they'll pay something, and that's it. I don't think Coinbase would be prepared to do that. They've got a very good a good standing really against all this regulation. I can't really believe what the SEC are trying to do. It seems stupid, and I'm not one to talk or buy into any kind of conspiracy, but it does look like there's something strange is going on for them to act so aggressively after basically being pushed for 2 to 3 years from Coinbase and being given the legal framework to work within, and then suddenly turn around and go, ha, psych, no, and I'm going, I was only joking. It just seems ridiculous. Anyway, let's have a look at price action. So at the moment, moving back down to the 26,600, which is our breakdown zone, which is also the bottom of the descending triangle, which is also a very realistic support. It's backed up on the 4-hourly as well by Bollinger Bands, 10 exponential, 21 exponential. So a lot of support sitting around 26,600. So we're back to where we were before, really. The V-shaped recovery was real. Resistance so far on this V-shape was a 200 simple and exponential on a 4-hourly, so could just be considered a death cross retest. So really, I'd say that we're range bound within the top side, which is 27,250, and 26,000. We'll call it 26,600 really. So this is our range for the day. And the break of one way or another on a 4-hourly closing basis should have continuation, which means that the bulls and the bears are going to slug it out at the moment. Now, on the 4-hourly, the bulls have control. On the daily, I would say that the bulls still have control because we closed the candle body last night above a Bollinger Band. Yeah, we're down below it at the moment, but there's no closure yet. You know, candle bodies count for a lot. So yeah, we're down below it on a daily, but we have not closed. So we have to monitor this and see where we do close today. If we close below here, then yeah, the bears probably have a bit of an upper hand for maybe a bit of another move back down in a natural consolidation way, similar to the way that this is consolidated from its previous peak over here. However, closures back above that level, and especially above 27,200, which is the 4-hourly 200 simple and exponential, will almost certainly reach the top of the trend line here, 27,600 or 700, give or take, depending on how long it takes for it to go. And then we might even be looking at a breakout. So things are looking very good for Bitcoin at this very moment in time. Look over to S&P Futures. Still looks pretty good for S&P Futures, holding above all major moving averages on 4-hourly, pushing this resistance. Again, it's an ascending triangle if you think about it in terms of a horizontal trend line here, and moving averages are pushing us up further and further and further. So this is why these are more bullish than bearish. It's clearly an uptrend, and the resistance is getting tagged many times. The more times you tag a resistance, the more likely it is to break. So it does look quite promising there. And again, yeah, very bullish here on the daily without any bearish divergence forming as well. Stocks seem strong regardless of the dollar's little bit of an increase in price volume, and I still think that the dollar has the power to move up into 105.3 to potentially 105.5. That's not an enormous move before a pullback of significance. We're talking about just another 1.5%. Again, that's complemented over here on the euro, which is doing the same thing. We're holding on to this 200 exponential on the daily, and if we break down to the tune of about 1.7%. The euro, however, does have bullish divergence on the daily as well. So this could be the area that we bounce from anyway. You know, I'm not suggesting that we definitely do, but that's what it looks like. It looks okay to me. The 4-hourly is still in a downtrend, so I'm not sold on this. But either way, a pullback of less than 2% on the euro before like a major bounce kicks in. A bounce on the dollar before a major pullback kicks in. So, it's not huge moves. And so if we're thinking about pivotal areas on Forex, then that's where we're looking for, and it's really not that bad at all. And like I said, despite the move down on the euro and the move up from the dollar, stocks are saying, I don't really care about all of that anymore. We're going to keep moving. AI stocks are still pumping, so tech stocks still pumping. Meta, Tesla, everything's looking quite good as far as tech is concerned. And tech often has a decent correlation to crypto. Have a quick look at gold. Just a very quick look, because gold is still consolidating from its previous high. There is a trend line that's more apparent on a daily here, and if we break down from here, yeah, we'll be retesting some of these lows, maybe even coming down sub 1900. But this is, as I was saying on the live stream last night, this is nothing more than just a reflection of the recent dollar strength, and as is the rally based around dollar weakness. So we've got a trend line here. This could easily be seen as a breakout and consolidation. So really, rather than expecting it to meet these lower trend lines, might even just be looking to see it double bottom around 1940 or thereabouts, maybe even the wick close 1930. So yeah, all looks reasonably good. If you want to get bullish on gold, you'll be looking for dollar rejection. You'd also be looking for reclaiming this Bollinger Band center on the daily, which is sitting around 1970. So everything's still looking okay right now. The thing to take away, though, from all of this is that look, the SEC pulled out the big guns, and they failed to pierce the heart of crypto, right? So if that is all they've got, which seems to be that's all they can do really now, they've launched these civil suits against Binance, Coinbase, and then some of the top cap altcoins. Just seems a bit mad that it resulted in a V-shaped recovery. And it didn't completely destroy the market. Not in any way as bad as something like the FTX scenario, where real money was lost. You know, this time round, it's not like that. This is just the FUD of the SEC. You see this sort of thing all the time with China. When you get things like this, it is often an opportunity to buy. I didn't buy because it didn't come down low enough for me. Obviously, my bids, my spot orders were way lower than this anyway. I wouldn't really even be looking to buy anything unless it's tagged a 200 simple moving average on a daily, and even that is above my bids from when this rally began. So I'm not really looking to buy into any of these dips. But for people who hadn't allocated positions, here, and here are the dollar cost average events, and so the first one yesterday was met and actually had a very decent response. Fair play. But until then, let's face it, we're in the descending channel, so maybe just expect to remain within it. A breakout from here would be pretty awesome, and then it's at that stage then when we get actually turbo bullish again. But for the moment, I would just say, look, let's just allow it to consolidate as the dollar wants a little higher, it just wants a little higher, and so we should just allow this to consolidate, similar to what we're looking at with gold. But if we break out, then we break out. We take it on face value. It's a trade to be taken. It's an opportunity to take advantage of. But until then, let's just look at the chart and forget about the FUD. And the chart is saying, we're still consolidating, baby. That's fine. We're still consolidating. But we're not dumping. We're not crashing. This is not catastrophic. This is simply just a consolidation from its peak, which will end up in a breakout somewhere along the lines. The way I would choose to interpret it would be something along the lines of this. We've got a savage uptrend on the 200 simple moving average, a reasonable uptrend on the 200 exponential moving average, and so over the next few weeks or so, monitor the way that we move into back. If we start to move back further down, this is how we should think about picking up if you wanted to try longs, or if you wanted to buy Bitcoin, then something along these lines. Yeah, we might come back down to a 200 simple rather than the bottom of the trend line. Yeah, we might move back up again to hit this resistance. Yeah, we might move back down to hit the 200 simple moving average. All of these would be areas of interest for people to buy dollar cost average into. And like I say, this is just projected based on the current trend of these moving averages. It doesn't mean that that's exactly how they're going to go. And there is no crystal ball with crypto, so we can't say that that's definitely it. It's about balancing the odds. Now, last night, I took a few positions in XRP, closed them, before bedtime. I just thought, look, I'm just going to take that profit, take it to the bank. But I have to say that at the moment, right this very moment in time, I would much rather wait and see how this daily closes on Bitcoin before getting into any more leveraged positions. However, if there is a token or a chart to be traded with leverage, it would still be XRP. We've got the pump signal. We've got the price action above all major moving averages. We're above that 51.5 cent zone, which is a major area of resistance. That should hopefully flip to support. And if we think about the movement of the moving averages, they're going to be crossing above there over the next few days as well, adding more weight to that 51.5 cent zone. Look, this is epic, and there is still 2 more days of the trading competition on BYDFi if you want to take part in that. If you set up with the link in the description and you KYC and then send me on Telegram your UID, you'll get your free $100 of trading. It's basically $300 to trade perpetual futures with. So seems like a decent setup for all. It's free money. It's a trading competition. It's the best chart in crypto. You can't ask for any more. But other than that, I'll leave it with you there. We looked on the live stream last night. There are quite a lot of other altcoins with decent setups that are doing more than V-shaped recovery that they basically used yesterday as a launch pad to go into a new local high. So it's not the end of the world. And actually, just before we finish, we'll just have a look at the dominance chart to see how that looks at the moment. The daily is back above all major moving averages, which is fine. We'll see how the 4-hourly looks if we were getting rejected on any particular area. Actually, so the dominance chart had a big bullish move, but it's still a series of lower highs, lower lows. But yeah, for the moment, I think it's still probably going to be a Bitcoin-driven market, looking for this top of the range again to be revisited, and maybe we get some continuation with altcoins again. The whole market is going to trend as one, but everybody's focused on Bitcoin. But I'm particularly focused on XRP. XRP is a better chart than Bitcoin, and so if there's going to be any trading done by me using futures derivatives, is going to be this chart. Right, thanks for watching. Hope you have a nice day. Take it easy.